Good morning. This is Connor from 0DTE Traders here to present the week ahead for August 18th, 2025. In this video, we'll cover this week's main events, gamma exposure, and sediment. Let's dive in. This week, attention will turn to the annual Jackson Hole Economic Policy Symposium, taking place from August 21st to 23rd, and concluding with a speech from Fed Chair Powell. The Jackson Hole event brings together prominent central bankers, economists, and financial experts. This year's theme, labor markets in transition, demographics, productivity, and macroeconomic policy. This is particularly relevant as the recent jobs and inflation data have put the Federal Reserve's dual mandate of price stability and maximum employment under scrutiny. Traders and analysts will be watching closely for any indication of the central bank's next move. Also on the calendar, building permits, housing starts, existing home sales, so housing data, along with FOMC minutes. Additionally, on the economic calendar, we have a wave of quarterly earnings reports from retail firms. Headlining that, Walmart, Home Depot, along with smaller rivals such as Target and Lowe's. At the same time, Russia Ukraine will remain in focus, with Ukrainian President Zelensky scheduled to meet with US President Donald Trump on Monday, that is today, so potential headline risk. To start the week, the Gamma Index, a measure of dealer gamma exposure, is positive, 560 million notional, although a reduction of nearly 50% day over day post option expiration. We remain above the transition level 63.45 flip and 63.95 zero gamma. Flip is a leading risk on, risk off indicator. As you can see, all strikes above positive, that is supportive for the market price. Most strikes below negative, that is destabilizing for the market price. Although this isn't a very clean transition below that flip level. Really, in between these two transition levels, it's kind of a mixed profile. Some strikes net positive, some net negative, which could be an indication of chop, just kind of higher volatility in that range. However, if we break that flip level, we definitely want to approach the markets a little bit more cautiously. Now, post option expiration, we can see there's about 30% of SPX open interest removed, most notably at 6450, 6500, 6400, 6300. Essentially, the reduction in open interest at these strikes weaken the level, essentially allowing the market to move a little bit more freely now. We've essentially been pinned between that 64.75 on the upside and 64.50 on the downside for the past three trading sessions going into OPEX. This is largely a function of option expiration, the supportive flows from Vanna Charm, kind of keeping markets boxed in between big gamma levels. But once again, these levels are weaker. In other words, it takes less demand now to push price higher and less supply to push price lower. Now, in regards to the upper bound, last Tuesday, the call wall shifted higher to 6,500, indicating that there's the probable outcome is for further upside. Now, the real question here is that call wall going to shift higher this week? We are seeing call gamma build overhead, most notably at 6,600. Although, given this current profile, we give a low to medium probability of that call wall shifting higher. And that's essentially just the upper bound. Now, SPX, we give a lot more weight to, but we do like to look at SPY as well. So if we go over to our dashboard here, SPY, 650 remains the call wall. Some call gamma building overhead, 655 and 660, but very similar profile as the SPX, creating as of right now an upper bound zone of 6,500 to about 6,515. Transitioning to our price chart, this is the SPX on the 30-minute time frame, and we have a multi-week upsloping structure originating from the August 1st lows, one test, two test, three test, four test, and we broke it here on the fifth test. This is at Friday's close. This is technically regarded as a bearish reversal indication. However, follow through now is a must. A break of this lower bound 64.45 flip, which opens the door to 64.15, 6400, and that zero gamma level at 63.95. As we highlighted, this profile in this zone is kind of mixed, so identifying support could be a little bit challenging. These are the most significant levels, but the market may find some support at 64.27, which is a previous all-time high, so I would kind of keep that in mind as well. As far as that upside goes, if we break that upper bound of 64.75, opens the door into that call wall zone. So after 3 days of consolidation, potential breakout or breakdown coming, which could present a good momentum opportunity. In regards to sentiment, the market appears stretched on optimism, with positioning that could be described as priced for perfection. Despite an upside surprise in PPI last week, rate cut expectations remain firmly anchored with a 92% probability of a rate cut in September. This is already priced into markets. At the same time, both equity and bond volatility hover near multi-year lows. VIX was pushing sub 15 over the past week or two. Additionally, risk appetite remains concentrated in mega cap technology, leaving broader market participation relatively low. This juncture, we're looking at two potential scenarios that could unfold. One, we get a sudden spike in implied correlation, which essentially means stock sectors are starting to move in unison, and that often precedes large index moves, more often than not to the downside. So, looking at this chart, we have the CBOE 1 month implied correlation index in white, the SPX in orange. As of right now, implied correlation is very low, but if we start to see that tick higher, could be an indication that we're seeing that sediment shift, so to the bear side, and we could see a more substantial down move. Second is rotation starts to kick in. Now we're already seeing signs of rotation over the past few weeks. So essentially growth lagging while traditional cyclicals and defensives advance. Correlation could remain low. And that would be a healthy development for the market and not an indication of broad-based panic. Now, the SPX itself may have a bit of a negative drift, a pullback, simply due to the fact that growth names, mega caps, exert the greatest influence on the S&P 500 because the S&P 500 is a market cap weighted index and those are the biggest companies in the index. So I think two things we're looking at here. We're most certainly due for a pullback. Now, if you're a longer dated trader, or let's say medium term, beyond 0DTE, SPX puts, VIX calls for end of September, probably not a bad bet here. Now, as far as 0DTE trading goes, our focus is not necessarily in anticipating these moves, but pressing on them once they start to materialize. So, break of that flip, -2 bearish reading on our market conditions signal, which is essentially an indication that correlation is moving higher. That's when we'll press the downside. Now, what is this signal? Within our Discord, we have what's referred to as our market condition signal. This is generated from our internals dashboard, and it looks at the VIX, the tick, volume difference, advanced decline line, MAGs, and trend, and it condenses it into one easy to read signal. You will have one of 5 alerts: neutral, neutral to bearish, bearish, neutral to bullish, and bullish. And essentially, this provides a snapshot of market sentiment and momentum at a specific point in time, helping you position directionally as well as choosing the right option strategy to take advantage of the market environment. Now, if you want access to this signal along with our data, research, trade ideas, you can join the team at 0DTEtraders.com. Best of luck out there this week.